So I'm staying busy today, reaching out to a lot of people that I admire, respect in this industry of education as well as monetary savviness in a sense. So, Mr. James Anderson, colleague from Silver Doctor slash SD Bullion, how you doing, my friend?
Good, Mike. Thanks for having me on.
Yes, sir. So I'm excited to have a chance to connect with you. And so last time we spoke was, I think it was last summertime when you were transitioning to another part of the planet. So I want to get your thoughts on life there. And so I also want to share with you my experience in that region. And more importantly, get your thoughts on this health situation that's underway. I can't say the word because if I do, you get flagged automatically. But I'm sure you're more than aware what I'm talking about. And then
Sure.
get your thoughts on life outside looking in, given the fact you're a U.S. citizen, no longer living in this part of the country. So with that being the case, at this current moment, what do you keep an eye on? What are you focusing your work on and your studying and education at this current moment?
Sure. This week, I think the Federal Reserve meetings that happened been pretty interesting. That Jerome Powell was giving an explanation of how the economy is going to the Congress and then to the Senate. So I actually, those things go up live and fully on YouTube, so you can go watch them if you care to sit through them. A lot of times you kind of have to jump, because a canned answer's coming, so you kind of have to jump and jump. So you don't have to watch all 3 hours. And if you're watching at 2x speed, essentially you can watch it and digest it 20, 30 minutes at a time. I found it very interesting. There's some really interesting points that Jerome Powell made. And, obviously, what's going on right now with the Federal Reserve's balance sheet it's historic in terms of the speed at which it's reflating, essentially. I mean, the only other times where it perhaps happened faster in a shorter amount of time was, after the dot-com bubble and the 2008 financial crisis. But I've got a chart I was looking at smoothed out for 12-month durations. And if you smooth that out for 12-month durations, the last 12 months have been the craziest injection of liquidity that the Federal Reserve has ever done. So it's obvious to me that there's something happening in the financial system that they're not telling us. They're very, very scared of it. And my bet is they're trying to get ahead of it because of the situation that the pensions are in and the baby boomers and stuff like that. I think they see it as almost a threat of national security. They need to prop the financial market up in order to keep those pension funds from fully being defaulting and not having enough to pay out. So my guess is what we're going to have is just a straight up melt up for a long time in virtually all asset classes. The stock market it'll probably go down in value in the coming decade, but nominally it'll probably not look terrible by the end of the next decade because they're going to be propping up, doing whatever they can. But what it'll get you will probably be a lot less than it is today. So I think it's really a combination. And then I watched, I don't know if anybody caught it, but Judy Shelton, they were grilling her today. And then, man, the Democrats came on strong. It was just a reminder of how partisan this whole thing is. You can't have any real discussions of, you can't have any intelligent discussions. It's all this gotcha political show. And to say that the Federal Reserve's not political and then sit through that, it's a joke to say that it's not political, because if it was Democrat, then they just basically poo-pooed her entire record and they all said, forget you. And the Republicans were, they're all gun-ho. And there was no intelligence at all involved in the discussion, and it was more of a gotcha game. So I just found the whole thing pretty wide. It opened my eyes. I don't think I've ever sat through anything as contentious as that when it comes to the Federal Reserve. So it was interesting. I suggest to your audience, if they can stomach it, to go watch some of that. That was pretty brutal. So.
Yeah, so I've heard about that. So, Paul, Mr. Half Dollar, hinted at, he tried to stomach if he couldn't. And so, you know how Paul goes, he can go deep. And so I'm not sure if you've noticed that, we haven't yet, but we got So I'll wear my tinfoil hat. Paul got his tinfoil hat, and we go out there, boy. I tell you, we go out there. And so he was basically mentioning, this is off air, he was saying that watching a little bit of that Judy Shelton ordeal, nothing looked like she's pro-gold at all, based upon her responses. And so my thought is, Paul, he's a person who believes that Trump is not necessarily what he say he is in the first place. So, and I was like, could this all be a part of the narrative for her to get in? And then when she gets in, she can be the Trojan horse that does some things, or is this all a game in the first place? What are your thoughts?
Yeah, when I see these people and the way they talk, and it seemed to me to be self-serving. I don't think they have an agenda that's any more angelic than that. It's simply for their own betterment, typically. And I'm sorry to say it's a bit cynical, but I think that's in general that's who rises to the top in our current day and age are the people that are they're not necessarily principled, because if you're principled, then they'll play the gotcha game on you, and you can't talk your way out of it because they know what your principles are. So, it's dangerous to have principles essentially in politics, and that's where we are these days.
Yeah. Now, a part of the hearing, I watched a little bit of yesterday, and I extracted a couple of things that we'll talk about in future videos. But one of the things I've noticed that each one of the committee members referenced was that the importance of the Federal Reserve remaining independent. We support you, and if there's any problems, let us know. It's very important that you remain independent. I'm thinking so they're clearly in on the game as well. And so I didn't get a chance to find out how we got into that. What behind the scenes are they talking about independence? Is there a push to audit the Fed again, or what?
Yeah, I think it's just simply the fact that to maintain the notion that the Federal Reserve is above politics, which is completely asinine. That's untrue, and they've always been political. If you look back at their history, it's always been a political thing. For the president that's trying to get reelected, they don't want to see interest rates rise. They don't want to see a clampdown on economic activity, because they know if the economy rolled over, they're going to lose the election. So it's always been political, and to act like it's not is disingenuous. It's just a bunch of grandstanding. It's a bunch of politics. It's basically show politics essentially. Yeah. It's always been a political thing. Money is political. The Congress, they love enriching themselves off insider trading. Same with the Senate. That they're allowed to, I think, still legally to do insider trading, and so they're all for the repo loans and the pumping of the financial markets, because it makes them wealthier. Typically, they mostly are in the top 0.05%, and they're probably doing pretty well, especially in the Senate right now. Yeah.
Now, with the whole repo action, clearly it's not Q, but it is QE. That's the narrative. And so if there's not QE and they're expanding their balance sheet to provide liquidity, they're talking about in April, they should be able to dial back, taper back, and yada, yada, yada. So what's the likelihood of April being a time frame they can actually dial back amongst this health scare that's going to cause issues where they're going to have to provide some liquidity for businesses that are not performing well? At the same time, the Dow's at a high, Nasdaq at a high, SP is a high. How do you make sense of all this if you can?
So, just go back to the end of 2018 and remember how, the stock market went down almost 20%. And then Steve Mnuchin called up essentially the plunge protection team, got all the major banks together. And surprisingly, the S&P did great the following year. And so, we have artificial markets, and at some point in the future, we'll probably learn more truths about what's been going on. But these markets are being propped up with a lot of fiat currency credit creation. I hear rumors that Steve Mnuchin has, some $400 billion in his own little slush fund where he can go out and do PPT at select points, which is absolutely crazy. I hear rumors like that because, obviously Mnuchin wants to do the bidding for Trump because that's who's his boss, and Trump wants to get reelected. And key to Trump getting reelected is to keep the stock market levitated and not have any gyrations downward. So you can bet Mnuchin has he basically has a hair trigger finger probably when it comes to calling up the PPT desk and making sure that the markets stay levitated. And then the repo market, obviously mid-September, there's a pretty tight correlation with this latest ramp in the stock market. You look at October, November, December, it's pretty obvious that the funds that they're injecting into the member banks, all the primary dealers, essentially the casinos on Wall Street, there's like 27 of them. If they're getting all these loans at like 1.5%, what makes you think they wouldn't just go out and make a couple of moves in the market and make the prices gyrate higher and then sell off and take a couple of profits and some bonuses? Wouldn't that just be common sense that would be happening right now? So I essentially think that's what's going on. You got a lot of people paying themselves basically with these cheap loans that they're getting from the repo market. So whether or not they're going to be able to pull it away in April, I don't think so. My guess is in April they'll come up with some new verbiage. It won't call it repo anymore. It'll be some standing room thing that they operate probably from the New York Fed, and it'll just be there to help in the future. Eventually, the Federal Reserve will probably end up having to tweak a couple of laws in order to start buying stocks outright. That's eventually probably where this goes. I mean, if you've watched Real Vision has done some pretty good videos recently on the pension crisis coming up. Raoul Paul, I mean, his contention is that the balance sheet of Federal Reserve is going to double easy, and it could triple in the coming decade. So, will $8 trillion be enough to help prop up the stock market? It would be interesting to see, because the majority of the stock market is owned by baby boomers. And at some point, you would think they're going to start selling off and using that for their retirement. And so who's going to be buying that, and what valuations? Those are good questions that I think most people are having concerns about when they look 10, 20 years out for the stock market's value.
Yeah, so looking out at the fact that the equity markets will continue to go up, and it really concerns me that if the Fed becomes an outright buyer, and so I know Switzerland there participated, Japan's participating, and so it's only inevitable that the example has been set that the Fed will outright participate. Now, as a younger person, we're in the millennial range. Does that give you any type of confidence whatsoever to get involved in that mix? Is purchasing shares of corporations that are not those are not the true valuations of those companies? Is that something that you yourself might want to put in your portfolio for your future 10, 20, 30 years down the line?
Yeah, personally, with valuations where they are, there's only you would have to go. It would be very difficult to go doing some value buying in terms of stocks these days. Most stocks, I mean, the Nasdaq it looks. I mean, it's up. I don't know, roughly 8, 6, 7 times since the bottom of 2009. I think it was at 1,200, and now it's around 9,000. So that's like an exponential rise in the last 11, 12 years. Will that continue? I'm not going to bet on it. When I look out next 10 years, I feel like gold's going to lead the commodities, and eventually the commodities are going to start playing catch up too. So those are my 1 and 2 bets. I would say gold, other precious metals, and then commodities in general. I mean, oil is so cheap versus financial assets at the moment. And no one's convinced me that we're not going to be using oil 20 years from now. I still think oil and natural gas and a lot of the resources that we currently use for the majority of our energy will still be the case in the future. I know there's a lot of hope about new technologies coming on, and I'm sure there's going to be some stuff that completely blows our minds in the next 10, 20 years that comes along. But until that happens, I would still bet on commodities. Just they're basically at 100-year low levels versus stocks and bonds. So is that going to continue for the next 10, 20 years? I don't think so, especially with the baby boomers as they pass away and they start selling off a lot of these these stocks. I think that those valuations will have to come down, even with the Federal Reserve propping them up. I think the value of these stocks is going to start losing to commodities.
Yeah. Now I want to put on the screen something I shared on my social media account. Let me find it. And so where'd it go? Let me grab it. Sure. But it was something that I shared, and I mentioned about how I personally am excited that I stopped gambling a long time ago. And so it's this picture right here. And so somebody posted this on their social media account. Where is it at? Oh man, where'd it go? And so I grabbed it. And so it talked about big baller bets. Share prices that are greater than $1,000. And so I'm thinking like AutoZone, Alphabet, Book Holders, Amazon.
AutoZone.
And I'm thinking like
I mean, I'm sure there's a reason it's so highly priced, but that's hilarious.
Right, so, and the thing is, apart from me seeing that this was a part of a mainstream news source, I didn't bother to really validate none of this. But I'm thinking like, I just noticed it said AutoZone. So I'm thinking like, is that real? So I don't know about AutoZone shares for real.
Oh man, I just thinking back to like my sports talk years. Get in the zone, AutoZone. Like that's like a joke. There's like a dime a dozen company. There's like 10 of those companies, where you go and get your stuff to clean your car with.
So just that right there was a great depiction of like, man, like the gambling, the dice are rolling. People are out here betting big.
Yeah.
And unfortunately, it's going to have to come down one day. And the people who are going to be dependent upon that will be the losers. And so I wanted to get into precious metals. And so I mentioned that the precious metals will shine bright. And so palladium It's a metal. It's precious. It's not not necessarily a monetary metal, but it was shining bright a couple of days ago. Especially, it's still shining bright in comparison to gold and silver. But what's happening with the palladium market, in your opinion, based upon your analysis and whatnot? And we'll go do the same thing pretty soon.
Sure. I did a video recently on the SD Bullion channel about palladium, and
grab the link if you can, and put it
sure.
to the far right, and I'll throw it up on there.
Yeah. So palladium is interesting in the sense that, like, a year or two ago, I did an interview with David Jensen. It was roughly a year and a half ago that I did it with him. Mm-hmm. And in that interview, I looked at all the four precious metals and their long-term charts, and technically how it looked. It just totally looked like palladium was the one that was going to be the first to break out. Yeah. And it certainly did. And David Jensen, in the interview that I started with him, I think it was in September of 2018, he essentially said, all the things that have come to fruition, which was going to be physically, it was a tight market. The lease rates in London were very high. And so that was giving the clue that there was going to be a price explosion because the physical tightness was going to keep coming. And it certainly has. The price back when we were talking was like $1,000, and now it's obviously 2,200. It's been consolidating since its recent blast beyond 2,500. But there's nothing in this currently that doesn't tell me that this. I mean, I wouldn't go out and place a bet on it, but I don't have money in it. But I wouldn't be surprised at all to see it pass $3,000 this year. And the reason is just simply looking at a couple things. You look at the palladium ETFs. The physical palladium in the ETFs have been getting drained for years now. And last year, I think the amount of physical palladium that got drained out of the ETFs, it's a lot more than the amount of palladium that's even underlying the NYMEX. I think NYMEX has maybe 37,000 ounces of palladium underlying its entire exchange, which isn't much. I think it's levered over 60 ounces of derivative futures contracts in palladium on the NYMEX versus 1 ounce of palladium that are in the warehouses. So, and just last year alone, they dragged out, I think, 80,000 some odd ounces out of the ETFs collectively in the palladium and the NYMEX. So the fact is it's still in high demand, even at these price points, even at escalating price points. And the shortages, David Jensen constantly tweets them out. He's showing us, double-digit lease rates in London. So that tells you that they're having difficulty finding physical supply, and that will likely keep coming, and at least for another year. So my hunch is 3,000 is coming.
Yeah. Now watch this. So I think when I did a live stream one time, somebody mentioned that, hey, Mike, palladium's going high, but yet either he or they or somebody he knows went to go resell it, and dealers weren't giving him that actual number. And so the disconnect there. So you holding on to something that appreciates nominal value, was at 2,600, whatever. He went to go take it back, or somebody went to go take it back, and they was not giving him nowhere near that. Why is that?
So it's the velocity of how easy it is to sell palladium. It doesn't turn over in your inventory like silver or gold does. You just don't have as many investors out there wanting to buy palladium bullion, especially on the retail side. And so that's I think that's why you see huge spreads. The markets that have the biggest spreads are typically the ones that have the most costs or the least amount of turnover, right? So gold is the tightest spreads usually because the turnover is pretty fast, and the charge to store gold is a lot less than to store silver. For, let's say silver just takes up more square footage, so it'll have a wider spread because of that for most dealers, and just the manufacturing of silver, all that adds up over time, makes up a much wider spread than say gold. But palladium will just have a wide spread because of just the lack of volume. I mean, that's really it. It's a dealer who looks at it. It's like 2,600. They think about the pricing risk. If they're not someone who hedges using derivatives, then they're taking price risk. And so, they may lowball you and give you something like $2,000 or something like that, and turn around and, sell it to someone who's palladium excited for, spot, so they'll make their quick trade. So it's just a question of like the two-way market and how liquid is it. And, I would suggest to that guy, go check out eBay, see what kind of volumes are happening on eBay if anybody's buying it. I would be surprised if there's a lot of volume in palladium bullion at these prices.
Interesting. So gold and silver. So silver is, $17 give or take, and so it's the most undervalued, underappreciated, and most depressed, would you say? And so, are you of the mindset that there will be 1-to-1 one day with gold?
No, I don't necessarily think it'll ever get to parity, but there have been times in history when that's happened. But I don't think in the modern era, with post-industrialization, where we use dynamite to blow off mountains and we scoop them up with huge, heavy lifting trucks. I mean, I think we pulled silver around 8 parts to 1 part gold. I mean, it could in a mania, it could get back to that level. It wouldn't surprise me if we had some type of currency crisis or some issue where a sustained one where it lasted for years. It could certainly get back to 8-1. But my bet is it'll certainly pass. I think 2011's low of 33. We'll probably get in the teens again, like 1980. But I don't expect it to stay there for too long. I don't expect that we're moving back toward a full-fledged, specie standard where we're using physical gold and silver in our currency. I mean, they may give us some pseudo gold standard where they tell us it's backed by gold, and we're still using paper and digital, mostly digital probably in the future, and a little bit of paper here and there. But I don't necessarily think we're ever going back to a time, at least with however many billion people living on this world. I don't necessarily think that we're going to be going back to a time where we use specie physical, coins like we did, 100 odd years ago.
Yeah. Now, I also agree with that. And so I don't think the powers that be that oversee this monetary system want to go backwards, and so they want to go forward. And so forward happens to be with central bank digital currencies. And even in that hearing, one of the representatives asked Jerome Powell about their concerns with losing the dollar hegemony in regards to China stepping up their efforts to roll out their cryptocurrency, and what if people started actually holding on to the Chinese cryptocurrency as a reserve, And so Jerome Powell mentioned that they're keeping an eye on that, and they're going to have something probably soon as well. So in your opinion, are we right at the point where we're supposed to be with everything melting down, everything looking as if paper will be a problem because if negative interest rates come about, then people will want paper. At the same time, that's not good for the debt-based model system. So digital currencies, that's going to be our future. What are your thoughts on that? Do you see them for perhaps linking or trying to convince the people to accept it by linking something to it and saying it's backed and redeemable in digits or what?
So I think we're talking about central bank digital currency. And so it's not necessarily a cryptocurrency like a Bitcoin or something like that. This is something the central banks would issue themselves and control directly themselves. You yourself would have an account with the central bank, and that would be where you would hold these units, and they would be on par with the fiat Federal Reserve notes, essentially.
Yeah.
I certainly think that they want that because it just gives them more control, and they get more pervy into how people are moving their money. It's a lot easier for them to have control in terms of expanding the currency system or collapsing it down a little bit more and tightening it at certain times. And it kind of gives away with the fractional reserve system, and by doing that, you can consolidate the banking system. Right now in the United States, we have over 5,000 banks and financial thrifts where people store their fiat currency. But my hunch is the central bank would like to consolidate that further. It's been consolidating over the last 50 years or so, especially since the financial crisis. It's consolidated even further. I think only a group of like 6, major commercial banks in the United States own or they hold over half of people's savings in terms of, just raw checking accounts and saving accounts. So, the consolidation will probably continue. And, the one thing about precious metals that I like is the fact that it's one of the last places you can go for privacy. And so for that alone, I mean, that sales point alone is a big reason why you should always have some precious metals, especially for the future, because having some layer of privacy, I think, is warranted where we're probably going in terms of the future and politically how things may go.
Yeah. Now, do you see like this year being that year where gold and silver happens to get a serious bid, given the fact that we are facing a lot of things, especially the economy slowing down? So do you see 2020 being a year where we see 20? I heard people throw out if we see $21 silver, then the sky's the limit. And then some people say 1,800 gold. And so all type of analytics are thrown out there. But in your analysis, what do you think?
So it's been interesting the last couple of years. The U.S. dollar has been pretty strong. It's held pretty strong versus other fiat currencies, and even strengthened recently. And even in that wind coming in the gold's face, gold's still been rising pretty strongly. So the fact that gold's going up, regardless that the fiat Federal Reserve note is holding strong versus other currencies, is a good sign. The other fact is that, I mean, I'm looking at charts in these major currencies, like, for instance, in the British pound, gold is recently broken to new all-time highs, Canadian dollar, Australian dollar, the euro.
Yeah.
Japanese yen is not quite, it was interesting. I was looking at the longest term Japanese yen, and I didn't realize this, but the old Japanese yen high in 1980 is still higher than where they are today. So that just shows you how corrupt that currency is.
Yeah.
It's basically been manipulated like crazy. But Japanese yen's broken out. I mean, these are all major currencies. You talk about the pound, the yen, the euro, these are the biggest. And they're all at record highs. So the dollar's coming, the fiat Federal Reserve note is going to be at record soon. And if you just look at it like on a long term, it's building this bowl. And my guess is it'll probably test 1900, like the 2011 high at some point. Yeah. And it may not pass it in the first go. It'll probably drop back and then get enough steam to pass it. And it's in that next passing where I think you'll start to see the big money players move in. I mean, when high net worth people see gold past 2K with strength and start surging higher, they're going to think, oh, that's a good momentum trade. I'd like to get into gold and ride it from $2,000 to $3,000 or $2,000 to $4,000 an ounce in the next years. So that's my guess, is that a lot of money will leak out of the overvalued asset classes into gold at that point. You'll start seeing heavy flows.
Now, for all of those financial products that have been spun out over the last umpteen decades, where they're primarily the bonds as well as mortgage-backed securities, the derivatives, all those things out there, those are at risk of imploding at this current moment. And so as the debt becomes unsustainable, they're going to continue to issue all types of liquidity. QE will become a global contagion event. Now, do you see people actually wanting to, trade, physical, or are they going to be trading ETFs or what? Because I'm thinking, like, if stuff really hits the fan, it's not a matter of profiting; it's about preserving your wealth at that point. So,
so I think major financial institutions will go into ETFs because by law they pretty much have to. They don't really have the option, just given the financial law that as fiduciaries they're pretty much pigeonholed to stay in the over-financialized system. So they'll probably go to GLDs and the IIUs of the world, and you'll see mega flows going in there. You'll also see probably major miners start getting some bids. You'll also see some of the smaller miners get some bids too. And you'll see, I think, smart already has happened for years now. Anyone, I think, who kind of can see what's coming, it has probably been buying bullion on the side. Any high net worth investors have been probably doing that as well. And that, last 10 years, I've seen that where millionaires come in and buy heavy. So that's been going on for a long time now for people who have a long-term perspective. I think you have a lot of people who, even in their elder age, think, I'll buy gold now and I'll just pass it off to my kin as I pass away in the next 5-10 years, because gold is inevitably going to rise given what we're doing to our financial system. And so, these prices that we're looking at right now, the 1,500, 70 odd, it's going to 2,000 fiat Fed notes per ounce. I mean, these are suppressed prices. They've been suppressed for decades. And I go back and look at, like, ever since the LBMA came into the gold market in the mid 80s, you can see there is a real divergence between what happened with the Eastern versus the Western price. And you can tell that ever since the mid 80s, basically when the Plaza Accord came around, and the LBMA came around a couple years later, you can see that basically London has been, people who are on the inside in the city of London have basically been front running precious metals, cutting them down, like death by a million cuts, essentially. Every time they had the London AM and the London PM fix, all the traders would front run it and make some money shorting gold and silver because they knew that the fix was going to be lower than what the market price should have been. And so it was just kind of like an inside joke, it seems, that it's been happening since the mid 80s. And so, like, I have a chart that shows from 1970 back, when the price for gold was roughly $35 an ounce. You have the change happened in the mid 80s, but the Eastern price, which basically is the price of gold after the London PM fix all the way to the next morning at the London AM fix. If you just keep adding that over and over all the way for the last 50 years, it's at $17,000 an ounce. And if you add the opposite of that, which is the London AM to the PM. Just take that gold price action and keep adding it from 1970 when it was 35. Just keep doing it. It's down to $3.17. And in the last 15 months, the price of the Eastern one has gone up over $4,000 an ounce. So it's obvious that the West is still going in there and doing its best to kind of manage the price and keep gold tapped down as best it can and buy itself more time. But at some point, they're going to have to give up the game because it's just the East has gotten so much gold. I think at some point they're going to want, the Western financial market's finally going to waken up and they're going to start buying gold and heavy. And a lot of that gold is going to probably start flowing back toward the West. You'll have ETFs demanding gold and you're probably going to see major flows come back toward the West because the Western investors are finally going to start buying it. They'll finally figure out what's been going on for so long. But right now, grab the tinfoil hat, put it on me because I just basically told you what a chart tells me. I just look at it and I can just tell you that's what's going on. Like I know the story. I can tell. I've been in this industry for 10 years, and that chart to me is one of the most damning things in the entire gold industry. It shows me that we have a market that's been suppressed for decades.
Interesting. Now, along with that, we talk about suppression and the intervention of the Chinese into the COMEX. And so I think it was at the end of last year, there's a price mechanism now for the yuan that the COMEX has allowed onto their platform or whatnot. So that lets me, me and Paul went back and forth on that a little bit. And so what is that all about? And so are they accommodating the requests of China based upon some backdoor dealings about the future where they're letting them get in on the action as far as price discovery?
Yeah, it's interesting, right? I mean, you would think with all this anti-China bashing that the administration's been doing, why would the CME group allow and give credibility to the Chinese yuan by allowing it to have a contract? Some people would say, no, this is just simply about them having another contract, another futures contract where they can make money off trading. And, personally, I'm not sure if that's necessarily true. I think that there's more afoot than that. My guess is both China and the United States in the long run, they eventually do want to see gold rise because it's going to allow them to debase their currencies further. I mean, the fiat Federal Reserve note, we can't have it this strong currently to pay off what we promised. And the Chinese yuan, I mean, it shouldn't be at 7-1 with the US dollar. That's a completely fraudulent price. I mean, the amount of printing they've done is historic. No central bank has ever done the amount of currency creation they've done. And the only reason we don't really know it is because no one gets to use the yuan pretty much outside of their country. And, when you talk to people who've done the math, it's pretty simple. Yuan versus the dollar should be probably at 25 to 30 for one. Right now, it's a 7-1. So there's a lot of devaluations that have to happen. And the question is, what's the easiest route to do it? And it's always historically been gold. Eventually, you let gold go crazy. And that essentially starts to go down the commodity complex. And commodities start rising and the general price levels start rising. And Federal Reserve finally gets inflation higher than the lying 2%, under 2% that they've been telling us for a decade now. Eventually, you're going to have the Federal Reserve admit to at least 3, 4, 5% inflation coming up, I assume. And the truth will be it's probably going to be in the teens at that point. So they'll keep under reporting it, but they'll at least admit that they're getting some inflation run. And they'll say the reason they're doing it is because they weren't getting 2% for a decade roughly. So they need to let it run hot for a little bit.
Yeah. So letting it run hot a little bit. What does that look like on the streets? What does that look like for your average household?
Yeah, it's going to have to be coupled with universal basic income. There's going to have to be welfare checks because there's just so many broke Americans. And that's what I think the Fed coin is going to be all about. I mean, they're going to be handing out free currency through the Federal Reserve at some point to average Joe, six pack. He's going to get a stipend of like $800 a month, which could ease some of the pain. I'm guessing that's what's going to happen. I mean, I know that we like to say the United States is the wealthiest country in the world, but I think we have to remember that the average U.S. citizen is not that wealthy when you actually break down how much savings they have versus Scandinavian countries or a lot of other countries in Europe or in Japan, for instance. The average people there are a lot more well off than the average U.S. citizen. So we have to remember that that they're going to do some various things like universal basic income, and I think the way they sell it is the Fed coin. I think will be the way they use to sell it.
That's the first time I've ever heard that. So that's putting the Fed coin to use, or the Treasury. So it will be central bank. It will be central bank issue with the approval of a Treasury as well as Congress. They're going to give a thumbs up if things get bad or as things are getting bad.
Yeah, I would think so. I mean, that's inevitably what's going to have to happen. It's kind of like food stamps. You know how they kind of went under the radar because they all of a sudden people had an ATM card and you couldn't tell, that people had food stamps before. It was pretty obvious when the current color of the currency that they were using to pay for their groceries wasn't the same as everybody else's.
Yeah.
But now it's very hard to detect. And I think that's the same. I think when you look around the United States in general, it's very hard to detect that we are, in general, just mired in debt. The average U.S. citizen, we're at record debt levels right now with households. So the debt can mask the underlying issues for a while, but ultimately, when things start going awry and people lose their jobs and stuff like that, they're going to need some type of help. And it's not just going to simply be food stamps. They're going to need more, I think, in the coming years. So don't be surprised to see universal basic income, even if Trump gets elected. Don't be surprised to see that as the next recession comes about.
Yeah, I can see, depending on where the markets are between now and that time, there being some type of fiscal push for the government to get into a universal style, and the government, Congress themselves, say, hey, it's time to do this now, and Trump signs off on it. So interesting. Now, I'm curious, as you get ready to wind down, you're no longer in the U.S., you're down further in the Central American region. And so, you moved there. And what's life been like there? Cost of living. And so looking back this way from where you're at now, do you see the chaos from a different perspective for what's going on here?
So where I live, it's a little slower. It's a smaller town. There's maybe 30,000 people. I'm up in the highlands, so it's cool. It's not too hot. Weather's really nice all year round. Similar to what you were saying about Medellin, the weather there, very similar to that, probably a little bit cooler. Mm-hmm. The demography of the place, the breakdown of different people, I would say roughly 2/3 of it is, basically people who are from the country, but they're actually Spanish heritage mostly. And then about maybe 5,000 of the 30, maybe 8,000 of the 30 roughly are actually indigenous population, which surprised me. I didn't know that there's many indigenous until I moved here. And these people have been here for hundreds of years, and it's only in the last 100 years that the Spaniards came. Before they kept them out through violence, but eventually they gave in as the Spaniards perhaps won legal title. I'm not sure exactly how it was settled, but ultimately the area I'm living in is really famous for coffee. And so there's a lot of nice farms and stuff, a lot of good farming going on because the volcanoes around here left volcanic soil, and farming is a huge part of the industry here. As far as like the cost of living, it's, I was in Toledo before. I would say in terms of like, food and such, you can eat just as well as you do in Toledo, probably a little bit better at a price that's a little bit cheaper. I would say it's probably 80% of the price. Even going to like a Whole Foods or something like that, it's typical in Toledo, like a nice grocery store. Here, it'll be probably 80% cheaper, especially when it comes to like vegetables and stuff that's grown around here. If you go to the fruit markets and such, you can get it at much cheaper prices, roughly 1/3 of what you pay in the United States, maybe a half, depending. So it's, I would say it's a lot cheaper in terms of like medical costs. If you need to see a doctor, it's very cheap. It's like $12 just to go see a doctor. I mean, if you need catastrophic insurance, it's going to be somewhat expensive to have some insurance in case you get really hurt. But you can decide on that if you want with the plans and such. But overall, the overall price of this place is a little bit cheaper than even Toledo. And what you get for real estate and such is cheaper than even Toledo, Ohio, which is Toledo, Ohio is not an expensive place to live. You can get a nice house for your family for 3-bedroom, 2-bath for $1,200 a month, and it's fine, and you live in a decent middle class neighborhood. But here it just goes further. Your currency just goes further, and if you're getting paid in dollars, it just it helps. I mean, that's the one thing about the fiat Federal Reserve note. It just amazes me how hard people around here work, and day in, day out, and they're thrilled to get $20, $25 a day. And it's just the amount of work and toil they do for these commodities that have been suppressed for so long. I mean, it just absolutely amazes me that we cheapen, the value of things that are hard to produce, that we have to have, and we elevate the prices of these financial assets that really, we don't have to have them that levitated. Yeah. And so at some point that, it always switches. The one thing about commodities, though, it's more of a V. And whereas bubbles in financial assets can last like a U, they take a little longer typically because all the higher ups, the people at the top, have an incentive to keep high, so they can do what they're doing right now, which is telling retail, hey, you can trade these with no commissions, no fees. And the reason they do that is because they want to dump them on these people. I mean, that's essentially it. So come on in, idiots, and buy these things at these prices, and then watch the transfer of wealth. This is what we call a transfer of wealth. And so, that's probably happening right now as we speak. It's going to play out in the next years. So.
Interesting. Well, Mr. James Anderson, it's been great having you join me here on RTD. It's great to catch up with you and get your thoughts and analysis on what's going on. And definitely, you threw out a couple of things that I didn't see coming. And with the universal basic income through the Fed coin, that's definitely something that people will be willing to accept, especially if things get bad, which they unfortunately will become. So, Mr. James Anderson, for those that might not know you, or can you point it back to you where you do your writing, where you do your video work and stuff like that?
Sure. So I do a lot of work on the SD Bullion website. So you can go to sdbullion.com/blog. Every week I put a video on YouTube on our SD Bullion channel up. And it'll review either things that are happening at the moment, or it'll review topical, longer term topics that hopefully subscribers will find interesting. It's free to subscribe. We've been doing it for 3-4 months, obviously, and it's been growing pretty well. So I'm happy with the growth of the channel thus far, but I want to keep people apprised to what I'm seeing and what the business has been seeing. So come on by if you have any interest as well. I'm on Twitter @JamesHenryAnd is the handle.
Okay. Sounds good. Well, once again, James, it's been great having you on RTD. Looking forward to connecting again, and perhaps even coming down to the area one day and hanging out with you and seeing some of the actual lifestyle for myself. So, but other than that, James, it's been great hanging out. And as always, everybody be blessed, be safe. If you enjoyed this, don't be afraid to donate a thumbs up and then share this video so people can find out what's going on, because this is the alternative media voice that is being suppressed right now, but you need to hear it. So other than that, be blessed, be safe. Peace.